Hello Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. It's Friday, it's the end of the week and the end of the month, and I thought it'd be interesting to see which markets are moving up and which are moving down. So let's start with gold, which has had a huge move today. We're last on the June contract of $1,293.20. You can see we had a signal right here to be a buyer at 1246.50. We talked about that when we did the last video, and you can see we've moved up. This is new highs. This is new highs for over a year. So this would qualify very well for a weekend trade. If we close up towards the highs, today's highs, the high was $12.99. Obviously, psychologically, 1,300 is going to be a big psychological area to go through. But if we close up towards the highs, within a dollar or two of the highs, then I think you really want to look at going home long gold for a quick trade Monday or Tuesday. Weekend trade, the 52-week rule. We've talked about that many times before. We'll delineate that on the sites later on. So let's go to our next market. Another market that's doing well is crude oil. We've talked about crude oil being bullish. You can see our signal came in right here, and that was at $44.20. We're currently trading at $45.70. Another nice little profit in there. But again, this market has, in our opinion, has made the turn. Like right here, it's made a nice base. It is a little bit overbought, and you could argue that we have a little bit of a divergence, but that's not proven yet. We're way above the parabolic, which is this line right here, and we just are making new highs on a Friday. Another thing I don't think you want to be fading this market at the present time. Last week we closed at, on crude oil, June crude oil, well, let's say start with last month. So we closed at $39.68. That was last month, okay? And last week we closed at $43.77. That was last week. So you can see we're up on both of those accounts. Certainly a large amount on this one, $39. That's a big jump, and we can see this still moving higher as we go throughout the year. I'm not sure what all is going to propel it, but it really doesn't matter. It's perception, and maybe it's the Middle East, maybe it's the election, who knows. But the reality is the trend is up. You can see right here the trend is up with a plus 90 score, and that indicates a strong upward trend. Okay, here we are. We're looking at the NASDAQ, a combined index, and you can see we had a weekly yesterday on the 28th at 48.08. You can see that right here as well, indicating that you should be out of the market. That's before the market dropped today, so you actually would have saved yourself some money. But a couple of things is, one, when we went below the parabolic, you can see that right here. That's an indication that weakness is in the market. Plus, we went below the 50 line, which is another sign of the market's losing strength. So theoretically, we could see this market come down quite a bit. If we put a Fibonacci number in here, you can see, if you just go from the highs here down to the lows, you can see we could see a 50% retracement to 45.84, which is about another 200 points from where we are right now. So let's see how that plays out. But generally speaking, this market's on the defensive, and you have to look where this market closed last month and last week. So if we do that, looking at the NASDAQ, we closed last month at 4,868 and change, and last week we closed at 4,905. So we're currently trading at 4,754. So we're down at least 150 points from last week's close. Not a good sign. And also we're lower on the month as well. So not a good sign. So this is the monthly close, and this is the weekly close. So we're down quite a bit on the weekly, obviously, but quite a bit also on the monthly. Not a good sign, and we're below the 50 line. So another negative sign for this market. Should be on the sidelines without a question in this index. Here we are looking at the S&P 500 cash. You can see we went below the parabolic yesterday, and also we had a daily signal. Not quite a strong thing, but the thing to look at here is we went below the 50 line on the RSI, and that's the first time that's happened for quite some time. You have to go all the way to the beginning of the year to see that happening. So this is definitely a change in the environment in terms of psychology and the perception of the market, and I think we'll see more weakness coming in. But we're waiting for the weekly to kick in. But if you look at where this market closed last month, this is the S&P 500. So we closed last month at 2,059 and change. That was last month, okay? And if we look at last week, we can see we closed at 2,091. And we're currently trading at 2,055. So we're down for the week is down, and also the month is down. Not a good sign going in the end of the month. So we actually ended the month flat to lower, not a good sign. And also for the week we're down, and plus we're below the 50 line, another negative in my opinion. Waiting for the weekly to kick in for an official exit on the market. That'll kick in probably when we go below these lows right here. And I think that's worth waiting for. So let's see how that plays out. We're looking at the Dow daily chart, candlestick chart. You can see we are a plus 55, which is a trading range. We've just moved below, yesterday we moved below the parabolic. Again, we are in a negative here. We're just below the 50 line, another negative. So I think we're going to see more of this thing is rolling over. We've talked about this before. We were very concerned about all the resistance in these markets and also the potential cycle we looked at. And the cycle was basically this. You're just going to have a high, down to a low, up again, down to a low, up again, and down again. So I think that's what's going to happen. But we want to see confirmation with our weekly and also with our monthly. So let's see how that plays out. But for the week, we are seeing this market. The Dow closed last week at, if you can believe this, 18,003. And last month, actually that's 18,003. And also last month we closed at 17,685. So if you look at that right now, we are lower for the month, lower for the week, and we're below the 50 line. Not a good time to be going home long in these Dow or the S&P or the NASDAQ. One thing I would do today is look at the Smart Scan and look for a scan of stocks that are making 52-week highs that have volume over 2 million. One that popped up today was Barrick. ABX is the symbol. And a lot of gold stocks that picked up. So you want to be careful which ones you choose, but certainly this one looks like it could be higher on Monday. So like a breakaway gap here, you can see that. It looks like it could be headed for maybe the 20 level, which is not a big move, but certainly if you can pop a couple of bucks out of this stock over the weekend, it wouldn't be a bad trade. And again, the rules are very simple. You buy if a market closes at or close to a 52-week high. If it opens on Monday lower, sharply lower, you exit immediately. And if not, you take your profits on Tuesday on the opening. Hey, I'm Adam Hewison. Thanks so much for stopping by. I hope you all have a great weekend. The month of May is going to be a very interesting month. So let's watch very carefully, watch those trade triangles because they do work. We had a great member say that they got out of Apple, which is about $10, about 10% higher than it is right now, and they thank the trade triangles. We appreciate those comments, so be sure to make a comment if you have any on our blog. We really like to hear from you, and we'll do our very, very best to answer them. Have a great trading week and a great weekend. Thanks for watching, everyone.